What's up, everyone? It's Cody with Money Investing. So thank you so much for joining in. If you guys can see the screen, if you guys can hear me without any issues, just let me know in the live chat, and we should be all set. So all right, perfect. Lucas, welcome on board. Timothy, welcome. Early today, yep. So we got the jobs report coming out in about 12 minutes. That's why I wanted to go live right away, because of course the markets will be affected by that, and we will be looking into that, and then we'll kind of break down some of the individual stocks as well. So thank you so much for joining in. We got about 9 minutes left for the jobs report for the month of July to come out in the United States, and then we'll also have the revised unemployment number in the US as well. Currently we're sitting at 5.9%, so I've got this open, so we will be monitoring this right now. So in the month of June, we actually added 850,000 jobs. Unemployment rate was at 5.9%, and then this right here was the specific industry breakdown and where we actually added those jobs, right? So total private jobs were 662,000. We had total non-farm payroll, so total private were this much. Total government were roughly 188,000. So that was the 850,000 total. And then this right here was the complete breakdown. So services versus goods. Goods were 20,000, services were well over 830,000. So that was the breakdown between goods and services and total private and total government jobs in the US. So what's my forecast? It's kind of a tough forecast because yesterday, well, a couple of days ago, we had the ADP jobs report, and they were actually much lower. They actually came in at whatever it was, like 360,000 something, when the estimate was much higher. So in my opinion, you know, it really depends. I mean, there's median estimate from the economists is at 870,000 is what I'm seeing on Bloomberg. So, but the economists have been absolutely wildly, wrong over the last 12 months as we've come through this post-pandemic recovery. So every single month, it's been kind of fluctuating drastically, right? So some months it was like 250,000 jobs. Some months it's been as upwards of 1 million jobs. So it's kind of like in the air. There's no specific pattern that we can actually understand when it comes to the labor market. Guys, do me a favor. Let me know if you guys can hear this. So let me know if you guys can hear this.
Well, I would love you to weigh in on the point that Mohammed Al-Arian was making in this Washington Post column, where he's saying that at this point, the Fed maintaining such an easy policy, the fact that they are maintaining their bond purchasing program as is, despite some of the hot numbers that are coming out, is actually counterproductive, and it potentially could even hamper the agenda.
All right, perfect. So yeah, we'll just tune in about 7 minutes. Hopefully by then we've got the report out. By the way, I was listening in on Bloomberg earlier. Bank of America has a new analyst, some analysts on Bank of America has a new target on the S&P 500, and I believe it was at close to 3,800. I could be wrong, but I was listening in on it because I just got like the last portion of the analysis. Let me just quickly check. But they were basically saying a 3,800 target from Bank of America, and we already know that Goldman Sachs basically put a target of, yep, so that is true. All right, so BOA Strategist raised their 2021. So 5 reasons the S&P 500 could slump. Here, let me see. Because Goldman Sachs has a price target of 3,400. Actually, you know what? Here, let me see. Let me see if I can bring this up. All right, this firm has a year-end price target of 3,800 from the S&P 500, a nearly 8% pullback from the current levels. That's Bank of America. Goldman Sachs, however, has a price target of 4,700, so 4,700 by the year end. We talked about it in our yesterday's video and our live stream as well. So that's roughly a 6% gain versus Bank of America's forecast of an 8% pullback. So they were just talking about that differential, that 900-point differential between Bank of America target and the Goldman Sachs target. That's a pretty huge differential. All right, looks like I'm lagging here. Is it better? Is it better now? Or is it still lagging? You know, it's when I have a lot of programs running at the same time, it just happens. All right, is it better? Am I still lagging, or is it much better? All right, better now.
And the question is,
All right, let's listen on this very quickly.
In the scheme of things, how will the market respond? What's the threshold for the Fed caring, right? I mean, is it enough to get one payrolls report like this without necessarily seeing the effect of the Delta variant and what might happen in September to say the Fed's going to taper?
I said earlier, it's the most important jobs report since the last one until the next one. The next one is September 3rd. And Tom, September 3rd, we'll have this conversation all over again. What does it mean for September 22nd?
Oh, we're in a natural disaster. John, the most important thing today is you had the JOLTS chart up.
Yeah.
Which is a McKee chart. And the fact is that's the dislocation of this economy.
Demand is stellar, it's robust, it's great, it's tremendous. Will supply arrive? Let's run through the price action as we beat the drum a little bit harder going into payrolls. Your equity market up 2 on the S&P 500, positive just 0.04%. Into the bond market, yields higher by 2 or 3 basis points to 124.99 on 10s. Your estimate, 870,000. The previous number, 850K. From New York City this morning, good morning. For our audience worldwide, with Tom Keene, Lisa Abramovitz and Jonathan Ferro, the payrolls report in America is up next.
All right, so yeah, I mean, this right here is going to be the S&P 500 right in the middle. We got the SPY ETF, and then we got the NASDAQ ETF here, ticker symbol QQQ, and then we got the bond yields over all the way on the left. So bond yields also really important because they've been sliding, they've been coming down substantially. They're now trading at 1.25. But they were as low as 1.17. So that's also interesting to note that we are up over 2% right now ahead of the jobs report. So what do you guys think? The median estimate is at 850,000 jobs. But what do you guys think? Where are we going to land with the numbers? Hopefully I'm not lagging again, because it's been a problem. When I have too many programs running at the same time, it just... I feel like it lags a lot. So yeah, just let me know if I'm still lagging or if it's perfectly fine, if there's no issues. Hopefully we can fix it. So DraftKings up over 7.5%. Look at that. So it's trading past over $54 on great earnings. So they actually reported this morning before the markets opened. So you'll notice that they narrowed Q2 loss as revenue rises, lifts revenue outlook for 2021. I am going to actually be switching to MacBook very, very soon. I'm going to be actually, by the way, if anybody has like the new M1 chip MacBook, just let me know what the experience has been or how the performance is. I'm actually looking into getting one with the M1 chip. So, but I'm not really sure how that compares with the Intel, like, i7 or i5, but let me know if anybody has that. But yeah, DraftKings, strong beat here, so narrated Q2 loss 76 per share. A year ago versus $1.80, analysts polled were at 58 cents per share. And then we got the revenue for the quarter rose to almost 297.6 million from 70 million a year earlier, and the street estimate was 247. So that's a huge beat there as well. Don't get the MacBook because M2 Mac is due in 1 month. Yes, I'm going to be waiting for the newer products as well, like the new launches. So we'll see. So yeah, DraftKings with a strong move. NEO we will cover in just a second. We will go over that shortly after the jobs report, which comes out in about a minute here. So let's just make sure that we have everything in order. So we got the yields over here. Again, all the way to the left, we got the 10-year yields. We got the SPY ETF here. We got the NASDAQ, ticker symbol QQQ, that's down over 11 basis points as well. So I'll put on Bloomberg as soon as the report comes out, and then we'll also go over the actual report and the charts, which should be reported on time, but sometimes it also kind of lags a little bit. So 30 seconds, and let's see how the markets actually react. Again, yay for DraftKings. Yes, Rita, I was actually thinking of you when actually they reported earnings and they were up over 7%, because I know that you're invested in DraftKings as well. We actually picked up DraftKings when that suit came out, right? There was like a big fear sort of news event where DraftKings dropped like 8 to 10% on one of the news. We actually picked it up during our live stream. We still have that, and I think we're up like 12 or 15% on that position as well. All right, so let's take a. All right, the jobs report's probably already out. We got the NASDAQ dropping over 17 basis points here right now, and we got the SPY that's also pretty much flat so far, and the yields are starting to push up just a little bit.
comes the payrolls report live from New York City for our audience worldwide this morning. Good morning. Your equity market unchanged. Your bond market yields are higher. 124.99 with the jobs report. Here's Mike McKee.
All right, John, we are seeing 943,000 jobs restored in the month of July, which is extremely good news, better than anticipated. Those who had the 1.2 million high end are closer than those on the low end. The unemployment rate declines by 0.5% to 5.4%. Now, I'm going to have to look that up and see why that is, if it's a labor force thing. But it is good news that we see that. The average hourly earnings are up 0.4, which is more than anticipated. That is a 4% annual rate, and we saw revisions to the last 2 months that go up as well. So more money, more hours, and more people working. The change in private payrolls, 703,000, a little bit less than we saw in the prior month, and a little bit less than the anticipated amount. So what I'm guessing is we have a seasonal factor in education here. I will check that out, but maybe you take a quick minute to answer the question Lisa's been asking all morning of how the market's going to react to this.
Well, let's get straight to that market action. Mike, thank you. It's an upside surprise. 943. We were looking for 870. Futures are positive. We're up by about 7 points. We're positive 0.16% right now. The bond market's where you get a repricing. Yields were higher. They're even higher now. By 4 or 5 basis points on 10s. We get a 127 handle this morning after seeing 112.58 earlier in the week. If we can have a little look at the FX market, Tom, euro dollar back through 118, 117.95. Tom, we're down there by a third of 1%.
There was almost a pause and then jump started it, not right at 8:30, John, but I'm really watching 30-year bond to see what it does at a 191 on a path to 2%. John, we've done 1.881 million jobs in 60 days. That's how I would look at that with that robust revision.
The yields are higher, the curve is steeper. Mike McKee, straight away, you know how this works. The number drops and then everybody says, what does it mean for the Fed? Mike McKee, what does it mean for the Fed?
Well, I'm just basically working through some of the numbers here that are important to the Fed. And you look at the unemployment rate dropping as much as it did. And then we look at the unemployment rates for blacks and Hispanics because the Fed focused on that. In June, black unemployment was 9.2%. It drops a full percentage point to 8.2%. Hispanic to 6.6% from 7.4%. That would strike one as substantial further progress. When we look at back to February of 2020, black unemployment was 5.8%. So it's still elevated, but it's come down an awful lot from where it was.
Mike, I know you haven't a chance to dive into it because you're talking and I'm looking, but median duration plummets. This is the duration out of jobs plummets, Mike, to 15.2 weeks from a 19 level earlier. Those are the kind of numbers that give the people under Chairman Powell, the PhDs, some confidence.
Yeah. Now, the issue is this is 1 month, so they're going to say, let's see the September numbers. But yeah, you get a number like this, some sort of numbers like these in September, then that September 22nd meeting could be the taper announcement. That's what we're going to be looking for, I think, at this point. That's probably what the market is going to price. I don't know, you were looking at the bond market. I don't know if you had a chance to look at the futures yet, but for Fed funds, but I bet we're going to start to see that move in a little bit from the end of the year.
And actually what you're seeing right now in the 2 year is you're seeing a pretty a bigger move there than perhaps in the 10 year as people bring forward the potential for rate hikes, but it's not that big of a move. It's actually surprisingly muted considering the fact that so many people put so much emphasis on what the Fed does. I'm looking at hourly wages. I find this fascinating. Hourly wages increased more than expected, and year over year, a 4% increase in hourly wages versus the expectation for 3.9%. The average hourly work week actually increased as well. How significant is this? All metrics point to more hours and more pay.
Well, there's two things with the average hourly hours worked. That is all that average hourly earnings multiplied by the extra time at work, so more money coming into the economy. Interesting note here, we see that leisure and hospitality led the increase in jobs, 380,000. Bars and restaurants up 253,000. Tom doesn't have to wait as long to get his drink this time. Those are the lower paid jobs. And so if that many lower paid people are coming into the labor force, it should depress earnings, and yet earnings are going up at a faster pace. So it does show companies companies are paying up to get people back to work.
John, quick data check before we get to Jeff Rosenberg. I'm looking at a bond market that picks up steam here, higher yields.
Yeah, that's where the action is, Tom, because equity futures aren't doing much at all. We're up 3 or 4 points on the S&P, barely a tenth of 1%.
Right.
Yields are higher. The curve is steeper. The yields are higher on a 10-year by 5 basis points to 127. Tom, it's an upside surprise. 943, 870 the estimate, and some really tiny revisions as well.
Lovely revisions. Jeff Rosenberg joining with BlackRock. And what's so important here is holistic and fixed income and doing wonderful work in multi-strategy as well. Is it a regime change today, Jeff Rosenberg, when you see the revisions, when you see 1.881 non-farm payrolls over 60 days, does it shift the BlackRock view?
You know, it's a really good question, Tom, because I was thinking the exact same thing, that, you know, we've had a lot of kind of negative surprises, you know, focused really on the Delta variant. You know, it's important to remember that this payroll report is really pre the CDC mask wearing change in guidance. It doesn't really incorporate some of those more recent changes. Yet, to the extent that we follow the pattern that we've seen in India and the UK, where the variant surges, but it's not a permanent surge, you know, we could be seeing kind of the peaking of the negative news that
All right,
has been
so
really
sorry about that. I was just
about
taking quick notes here. So we got 943,000 jobs in the month of July. That's much higher than the expectation at 857,000. And that, of course, drops the unemployment rate by a full 0.5 percentage point. And we're now sitting at 5.4%, which is what I was showing you guys earlier here. So if you come over to this chart, we're going to just reload this over here, and this right here, the civilian unemployment rate. Of course, we're coming in from 14.8% now down to 5.4% as of July. Now, is this number accurate? Is this number correct? That's up for debate. That's a decision that you need to make, because this is all the data that we have, right? This is the actual data that's being reported. Of course, you know, the accuracy of it is completely up to debate here. But Hispanics and African Americans, those are specific jobs numbers that the Fed is really focused on when it looks at substantial further progress, and we are seeing that drop also. From African Americans, 9.6 to 8.6%. For Hispanics, coming down by 0.5 percentage point as well to 6.4% in the unemployment rate for them. So here, let me see if I can actually do this. All right, right there. So that's also the drop that we're seeing from 9.2%, if you guys can see that on the screen, to 8.2%. And then when you look at other sort of ethnicities here, so you'll notice that they are also dropping from 7.4% to 6.6%. So actually that is a drop of 80 basis points. So, you know, that's what they look at. They look at different categories. That's what they label as substantial further progress, just not by looking at the actual unemployment rate. They want to look at progress throughout the different sort of categories that are listed over here. So that's that. And then if you come over here, so again, we added 943,000 jobs in July. Unemployment rate declined by 0.5% to 5.4%. So again, we declined by 0.5 percentage point to 5.4% in July. The number of unemployed persons fell by 782,000 to 8.7 million. That's actually really a strong number. The reason I say that is because that is actually part of the jobs report, the JOLTS report, right? That's the job openings in the U.S. The JOLTS report actually wasn't that supposed to come out next week? I could be wrong, but it's coming down to 8.7 million, right? That basically goes to show how many jobs are currently open in the economy. So that was currently previously sitting at 9.2, 9.3 million. That's actually coming down as well. So you'll notice that the unemployment rates declined in July for adult men 5.4%, adult women 5%, whites 4.8%, blacks 8.2%, Hispanics 6.6%, and the job rates for teenagers 9.6%, and Asians at 5.3% showed little change month over month. So that's that, and this right here is going to be the total number, 943,000. Let's see where we actually added most jobs. So total private, 703,000. We got total government, 240,000. So when you sum those two up, that's going to be the 943 that we're seeing for the total. So of course, private getting most of the jobs at 703,000. Those are like private corporations, enterprises, and then government jobs at 240,000. We got goods, only 44,000, with services at 899,000, roughly 900,000 jobs. So mining and lodging is, yeah, whatever that means, 6,000 jobs. Construction, 11,000. That's actually picking up from a few months ago. Last month, we actually saw a decline for construction because the prices of materials was actually going up. So there was basically a drop in construction workers, and they were getting laid off because they were taking the summer off. So it's good that we're seeing a kind of like an increase in construction workers of 11,000. Manufacturing's up 27,000. We got wholesale trade at 2,800. Retail trade down 5,500. That's interesting right there. So that actually saw a drop month over month. This right here, transportation, warehousing, 49,700 jobs. Utilities, negative 100. Information, we are up over 24,000. Financial activities, we are up over 22,000. And then we got right here is going to be professional business services, 60,000. Educational health services, 87,000. And the biggest gainer is a leisure and hospitality. Same thing happened last month and the prior month as well. As the economy reopens back up, and 380,000 jobs added in that category in the month of July. So all in all, I'd say it's a pretty strong report. When it comes to substantial further progress, we are getting closer to that. And the closer we actually get to that, that is going to be both good and bad for the economy and the markets. And the reason I say that is it's great for the economy because more and more people are going back into the workforce. People are getting more employed. They're making more money. The average hourly earnings are also going up. So it's good for the economy. But in terms of the markets, what the market is potentially thinking, and again, this is my sort of expectation, is that the closer we get to substantial further progress, the sooner we taper. The sooner we taper, the sooner interest rates go up. And the sooner interest rates go up, the quicker we get to quantitative tightening, right? And move away from QE, which is quantitative easing. That's kind of like the environment that we're in. But if the labor market improves very quickly, then in the next FOMC meeting, in the next sort of, that's in September, we don't have one in August, the Fed and the members of the Fed basically start thinking about, okay, so the labor market's improving significantly. Is it time to start tapering because the economy is getting stronger, right? That's kind of like the analysis, and it could be both good and bad for the markets and the economy. Really starts for us to think about which one is going to start like really have an influence over which, So, all right, that being said, the NASDAQ is down pre-market 32 basis points, and we got the SPY that's pretty much flat on the day so far, pre-market as well. And the yields are up over 4.3%. Again, if you guys have any questions about the labor market, we just broke that down completely. And just looking at the broader markets as well, we are seeing a little bit of a move to the downside. Let's see how the Dow is doing. So the Dow Jones ETF, we're up over 21 basis points for the Dow. And the yield's up over 4%, and the VIX is actually also coming down substantially. So VIX is down over 2%, now trading under 17 levels. Let's take a quick look at the yields here, up over 4.5%, moving back up to 1.28. So that is a substantial number. And the average hourly earnings also went up by 0.4% or 40 basis points, as companies are willing to pay more and more to their employees to bring them back into the labor force, right? They're actually paying more to basically for them to work, because Joel's report, the job openings has pretty much remained very, very high at elevated all-time highs. So that number is also coming down to now 8.7 million jobs. So yes, Mark, we covered DraftKings earlier. It's up over 8% now. That's a very, very strong move for DraftKings, trading past over $54.62. So that is a very strong move to the upside. They actually reported some really good numbers. So revenue came in at 300 million versus 247. That was a revenue beat, and EPS actually narrowed year over year, but still came in a little bit short of expectations. But strong move from DraftKings ahead. So looking ahead, the company increased its fiscal year 2021 revenue outlook to a range of 1.21 billion to 1.29, from a range of 1.05 to 1.15 billion. And the street forecast was 1.18, so we're coming in much higher than the forecast. That was one of the biggest thing, right? Going into the earnings season is like what the companies are going to basically tell us in future guidance is what's going to dictate where we go for a lot of these companies as well. So I think DraftKings, the next resistance to watch for us on the day is going to be this $55.30 level. So that right there is going to be the resistance level to watch. And of course, the reopening of the economy, we will potentially or could see more sports betting, more business for DraftKings in the future as well. So I think everything is good, and we're progressing in the right direction for DraftKings' business as they continue to raise their guidance as well. So that's the next resistance. Again, strong move over 8% on the day for the company. Talking about Pubmatic very quickly, it's been going up. It was up over 6% yesterday, and it's up over another 5.8% today. They don't report earnings as far as I'm aware until August 10th, which is going to be next week. But you'll notice, right? So we actually came all the way down to this support, almost, not quite. So the low for yesterday was $27.83. And we came down to $27, like almost that support before bouncing higher. So I think this was the support that we were talking about in our live stream yesterday. And this is a bullish engulfing candle. Now we're starting to see some little bit move to the upside as well. And I mentioned that this is a stock that is right now a little bit shorted. The short interest still stays pretty elevated for this company. So I wouldn't be surprised to see a little bit of a push higher, some more upside, considering that the RSI of the MACD was also very, very oversold. So the next resistance to watch for this is going to be sitting roughly at $35.70. So that right there is going to be the level, all the way as $44 for Pubmatic. So all right, let's take a quick look. Right here, we got, again, the SPY pretty much flat. The NASDAQ, for some reason, dropping. Again, it's like that thinking the market probably has, is that if the labor market is improving and we're seeing substantial further progress, whatever that means, the definition according to the Fed, because in the recent FOMC conference, he also mentioned, Jerome Powell also mentioned that they don't have like a specific variable or a numeric data where they can pinpoint, okay, if this happens, then we're going to see substantial further progress. It's more like they're going to have to continue to monitor the labor market. And the better it gets, the sooner we taper, and the sooner we raise interest rates. And the sooner we raise interest rates, the worse it's going to be for higher growth tech companies as opposed to the Dow Jones companies or the S&P 500 companies. That is one of the reasons why I personally think that the NASDAQ is down more, or 35 basis points, relative to where the S&P and the Dow are trading. And of course, to pile on the yields being up over 4.4%, that's also potentially one of the reasons why we're seeing that drop in the NASDAQ right now. So we got NEO that's up over 46 basis points. Let's take a quick look at all the other stocks. So Tesla down over 22 basis points, trading as low as 713. Apple is pretty much down 0.5% pre-market. We got Amazon also slid right at the jobs report, down about 26 basis points. AMD down another 1% today, trading as low as $110.99. So pre-market pulling back right now as it seems at 111. Let's take a look at NVIDIA. So NVIDIA is also down 0.5%, 205. We got Microsoft that is pretty much down about 40 basis points. Square down about 75 basis points. We got PayPal down 42. Etsy is pretty much flat. Etsy had a really sort of like a volatile day yesterday, so it rallied all the way to as a 190, pulled back down to 181, and rallied all the way to as a 193 before kind of fading away on lower volume as well. NEO, a golden cross. Let's take a look. So, all right, let me just. All right, this is the wrong chart here. So yes, I do have the premium version of TradingView. So that's when they have like a lot of features, including pre-market and after hours and all that different things. So yeah, I do have both of those with TradingView for those subscriptions. All right, let's take a look here. So this right here is going to be, yep. So you guys are right. We're seeing that golden cross for NEO. Wow, I didn't even notice that. So 50 SMA crossing over that 200 SMA. But I would take that with a grain of salt because they don't always pan out. Like this right here was a death cross, but instead what happened, we actually ended up rallying, right, for NEO. So, and you'll notice that we actually bring out the chart. This right here was the death cross. We actually ended up rallying all the way to highs of $55. So I would take it with a grain of salt, even though we are seeing a little bit of a golden cross here from the 50 SMA crossing above that 200 SMA. There's no guarantee that we're going to potentially see a rally even further. So, so I am still holding Etsy. I picked it up yesterday. The alert was sent out to pretty much all our members in our Discord. Some of them actually day traded it, which is fine because Etsy actually rallied from 180 all the way to highs of 193. And then some of them are still holding on for a potential swing trade. and some of them are holding it for a longer term position as well. So it really depends on what your strategies are and how you want to sort of position yourself for that specific company. I would personally like to buy more at closer to 150s for Etsy. I think Etsy 150 is like my desired preferred entry, but also, you know, I don't know if we're going to see that low, because that would be a drop for Etsy stock from like current levels, you know, potentially down. So we're talking about another 14-15% drop, and that only will happen if we see like a much bigger drop as well from the Nasdaq, right? Nasdaq and the S&P. Great channel, thank you, AJ. So does the good non-farm payroll numbers mean the correction is going to be delayed? So again, we just talked about how it can potentially affect the markets. So right now you'll notice that we are seeing the Nasdaq come down, right? It's down over 49 basis points or 50 basis points pre-market. We got the S&P that's down almost 9 basis points, so now turning red. The way that I'm dissecting this report is that it's great for the economy. It's great that the numbers are actually going up. But the way the market is pricing this information in is because there's substantial further progress. We're getting better and better for the labor market, which in the eyes of the Fed means a stronger economy. And a stronger economy can weather through asset purchase tapering. A stronger economy can weather through an interest rate hike, right? A stronger economy can weather through quantitative tightening. And the economy can weather through all those things, but the market may not, right? That's kind of like what I'm getting from this jobs report, is that may kind of signal the Fed that, you know, we are improving the unemployment rate across the board for all different categories. We're adding more jobs each month, and potentially it's time to taper, right? Taper and start thinking about when we want to start raising rates as well. And when that happens, the market is kind of pricing in. Again, the market is forward looking, right? We're trying to price in what the next 12 months, 18 months is going to look like from today. So that's perhaps what the market is pricing in. Of course, the bond yields are up over 5%. That's why I have the 10-year yields here. We're back up to over 1.29. So, you know, the bond yields going up, which is a very, very reasonable reaction from the QQQ ETF, the Nasdaq, and the S&P also coming down. That really goes to show that bond prices are also coming down with the stock, with the equity prices. Yes, the markets may interpret the stronger jobs data as pretext for Fed raising rates. Yep, so I agree with that. So short term, the markets will react negatively, but long term, it will be good. It's kind of hard to predict exactly where the markets are going to be long term. It really it depends on the taper timeline and the interest rate timeline. Right now, if you take a look at the summary of economic projections, again, I don't know if we're going to have that. So summary. All right, let's just pull that up. Let's see if you have that. So, all right, this is the PDF. You guys can get access to this. This is the actual Federal Reserve website, federalreserve.gov. So if you go over here, you'll find out what their projections are. You'll get their dot plot. You will get their projections in terms of, I just want to make sure that this is right. So June 16th. This is the last time they actually reported these numbers, was on June 16th. So if you kind of scroll down, you'll notice that their summary of economic projections right here is actually this dot plot. So this dot plot shows how many members of the FOMC actually expect raising rates and when that's going to happen. So right now we have 2022 right here. So in 2022, and again, the lowest number you see is 0%, right? Pretty much where we are. So 0% right here. So 0.00 is going to be all the way at the bottom. Everything on top of that is going to be 0.25 to 0.5 to 1%. So these are like in 25 basis point increments, 0.25 basis points. So for 0%, we pretty much have every member except for 1, 2, 3, 4, 5, 6, 7. 7 members that expect by 2022, next year, we're going to be above 0%, out of which 5 members believe we're going to be at 0.25, and 2 members believe that we're going to be at 0.5, I believe. So 0.75, I'm sorry. So we're already at 0.25. 5 members believe they're going to be 0.5%, and then 2 members believe they're going to be at 0.75. And then move on to 2023, that number jumps to 13 members, right? So we got 3, 6, 9, and then 11. Actually, 11 members think that we're going to raise rates. And then longer term, pretty much everyone thinks that we're going to be much higher, somewhere between in the range of 2 to 3% for rates. So it's kind of hard. And then this will also potentially be released in September when they have the next FOMC meeting. So we'll get a good understanding on what that timeline looks like, because that's what the market is really going to be focused on, is what that taper timeline looks like and what the interest rate position is going to be. Stefan says, so what's the general consensus today then? Low jobs report, stocks go up, higher than expected report, stocks go down. I mean, it's kind of looking like that pretty much. I mean, for the most part, it is kind of playing out that way, because even though we got better than expected labor market report, the NASDAQ basically slid almost 40 basis points. It's almost as if like it doesn't make any sense, but at the same time it does make sense. Like the market is just so weird like that every piece of catalyst you think it should go like the one way or the one direction, and then if it goes the opposite, if you try to understand the reasoning behind it, it just like doesn't make any sense, but at the same time it does make sense. It's kind of like weird how the market actually does operate and starts forward looking immediately and starts pricing in everything that the market has to offer. All right, so now we're gonna switch over to some of the individual stocks. We got about 30 minutes left for the markets to open. We'll try to break down a few companies here. So we'll see if we can get through a lot of them. If not, then we'll just break them down in a different live stream as well. So all right, we got a couple of people talking about the market is beautiful. I love it. Yeah. I too. It's super exciting to just like understand the macros behind the economy and what's really moving the markets, and then of course individual stocks as well. So DraftKings earnings we actually broke down earlier, so you're more than welcome to kind of go back in the live stream and then check out the analysis, what they actually reported, and what levels we're watching next. So this right here is going to be our technical analysis. So right now you'll notice that we are starting to break out. We're up over 8.5%, trading almost at $55 a share. This is the breakout here, and the next resistance I'm watching is going to be at 55.50 levels for DraftKings at the moment. So that right there is going to be the level to watch. And then Palantir would be good buy before earnings next week. Kunal, is that a question or is that a statement? Because you don't have a question mark, neither do you have a period. So. Are you asking or are you suggesting? But yeah, Palantir, we actually broke down the earnings in our yesterday's video. I think it's just coiling in to really make a move very soon here. So you'll notice that we have just been kind of consolidating sideways, basically making some type of a ascending triangle as well. So this ascending triangle is in the context of a bearish sort of flag, so to speak. So it's kind of like in the bearish context. So you'll notice that we prior to this ascending triangle, we've just been rallying down about 25%, and now we're just starting to make this ascending triangle. So after the earnings, I have a couple of support levels that I'm watching. So if it drops like it did the last time, all the way came down to $17, that's going to represent a significant opportunity to accumulate more, considering that the earnings report is really strong, because then we actually rallied over 61% as well. All right, so question. So, personally, I don't like to trade like strictly based on the earnings, because these are like binary events. Like they can either go like down or up. It's like a 50-50 probability outcome, which is why just basically trading on the earnings is kind of like not my personal preference. But if it does drop to $21, $17, I'll see that as a buying opportunity to accumulate more Palantir shares, considering that the report is really strong from the company as well. So Dan, when does the job numbers come out? Does anybody want to help out? When does the job numbers come out? And help me answer, Dan. So Corsair up over 3% here. So 3% strong move to the upside, and pre-market we are basically flat right now. So basically down about 7 basis points. But this right here, 28.50, is going to be the resistance level to watch for Corsair Gaming. So that is going to be the level to watch intraday, because we got rejected previous support, and then on the day we actually got rejected for Corsair Gaming. You think Palantir would drop or rise on earnings? I do think that potentially, it's kind of like a tough call, but I wouldn't be surprised if it drops on earnings. I wouldn't be surprised if it pulls back on earnings, because it's like, it's again one of those things where everyone thinks or expects the stock to go up on earnings, and then of course it does the complete opposite, like we saw over here, like a huge drop, and then just the buyers stepped in. So this right here was a drop on the earnings on May 12th, and you'll notice that we actually dropped all the way to lows of $17 before the buyers stepped in, pushed us all the way to $20 a share. So intraday, that was like a gain of almost 20%. So Dan, yeah, the job numbers came out at 8:30 a.m. Eastern, so about half an hour ago. We broke that down earlier. So if you go back on the live stream, you should be able to see like the entire breakdown of the numbers, the unemployment rate, the average hourly earnings, different sectors where we added jobs, and how it's going to potentially affect the broader markets. So Palantir, yeah, I wouldn't be shocked to see like a $21 retest, or even as low as $17 retest for the stock as well. Yeah, I mean, you can never understand the market reaction, but it's like when you understand the reasoning behind it, like I said, for the NASDAQ, the reason why we are pulling back is because we're tapering. Timeline could start sooner because of a better than expected labor market, the jobs report getting better. It kind of makes sense as well, right, as to why that would happen, why the markets would drop after a really strong jobs report. All right, let's take a look at Baba. So Alibaba here, down 71 basis points yesterday, but up over 23 today. So we're just still pretty much consolidating at the moment. There is some really strong resistance levels to watch for Alibaba. So the first one is going to be these lower highs. So that's the red line you guys see on the chart. Consistently getting rejected at those lower highs for Alibaba stock. So until we actually break out of that trend, in my opinion, there's not a clear upside direction here for Alibaba. Like we could see kind of push higher and then once again get rejected, right? So it's kind of going to be like push higher and then just get rejected and continue to kind of fill in this channel. But if we can successfully just move up, come down and then break out, and then this right here is going to be a strong resistance as well at closer to $225 to $240. If you can push higher and then come back to revalidate and test that support, I think that's going to be a much better reversal for Alibaba, because right now you'll just notice that we are just consistently kind of falling in this lower high and lower low pattern. So descending triangle for Alibaba stock here. So all right, so do you mean like a descending triangle or like a wedge? So again, this is like a clear, if I were to remove this, I mean, there's just like lower highs and lower lows being formed, unless you want to put something like, let's just get rid of this, and let's just put like a line maybe down this way you're talking about. So if you put like a lower lows over here, maybe that's like a descending wedge that you're referring to right there. So that could be like a descending wedge, like a giant wedge. But we have less touch points here, in my opinion, than we have for this one, right? For this lower highs and lower lows. I think it has more touch points. It's been validating. And you will see like these events where, there's external events which basically push us out or pushes us away from this pattern. Right, so I'll give you like a simple example. If there's two lines here, right? If this is the trend for a company or like a stock, right? It's just been pushing up in this sort of range. It's just been making this higher highs, higher lows. It's been kind of nice and here, but something comes out, right? The earnings releases and they actually do really poorly. It can break down from this trend, right? It can break down from this trend and then revert back into this sort of higher high and higher low pattern. Right, this right here is kind of like a binary event that basically drops us, and then we continue on that uptrend. So that can happen for any stock, and that's I think what happens with Alibaba is that you have a clear trend of lower highs and lower lows, and then you have these huge gap downs where it dropped over 13% on December 24th. Right, Christmas Eve it dropped that much because I believe like around that time was like Alibaba was getting some scrutiny, some bans. I think Jack Ma also went missing around that time, so that was one of the reasons, or could have been one of the reasons why it was down that much. But I think it has much better touch points with this lower high and lower lows. So support levels at 180. So I'll share my analysis on Discord channel. Please have a look. Yeah, definitely, I'll take a look at it. Do that. That would be great for us to look into. All right, so let's take a look at Moderna. So Moderna actually reported. I don't think Moderna reported today. Did they? Let's take a look. So, all right. All right, so this right here actually came out August 5th. So Moderna swings to second quarter profit, says booster shots against Delta variant likely needed. So you'll notice that the Cambridge, Massachusetts-based biotech company reported a profit of $6.46 a share compared with a loss of 31 cents same time last year. Wow, look at that year-over-year comp for the company, from 31 cents to $6.46. That's a huge jump year-over-year. Revenue for the quarter was $4.35 billion from $67 million. Oof. Wow. Analysts polled estimated Moderna would report $5.59 a share, revenue at $4.23. So they got revenue beat, EPS beat, same. Great year-over-year comps for the company as well from same time last year. And Moderna said that revenue from the sales of the vaccine mRNA were $4.2 billion for the second quarter. The company delivered 199 million doses during the quarter, including 126 million doses to the U.S. government. The company added that it has signed contracts to deliver around $20 billion worth of vaccines to various countries around the globe in 2021. And for 2022, the company has contracted to deliver $12 billion in vaccines with options for purchasers to acquire an additional $8 billion. So I don't see any future guidance from the company here. But it seems like this is a really, really strong report. But to what extent is that priced in? Of course, they're being added to the S&P 500, but I feel like the earnings also, to some extent, was priced in, because look at this move. I mean, Moderna has just been on a rally recently, right? It's just gone up from like $165 to like $410. This is like a 200% gain from like May 12, 13. That's a really strong move. We got the RSI, well over 81. We got Amazon, I'll go over in just a second. Beluga, I'm just gonna go over Moderna first, and then I'll switch over. But look at the RSI and the MACD, like really overbought at the moment, and the price. I mean, that's a really strong gain. I mean, coming in from like earlier this year, the stock is up 331%, almost 300% year-to-date gains. that's like incredible return. So again, congratulations to everyone who's been trading this, but I wouldn't be surprised to see a bit of a pullback here for Moderna as well. So there is going to be some support at 362. So yeah, I'll definitely take a look at that chart. And again, thank you for sharing. I'll take a look at that analysis and kind of share my thoughts as well. All right, so let's take a look at Robinhood. So Robinhood is up another 11% today once again. We actually came down to fill some of this gap, so I'm going to actually reduce this to this much. So we filled most of this gap. It's just been really volatile stock lately with the share offering and then just a rally and back down. So this right here, we basically pushed up, came back down, validated some of the support at $49.50-ish per share before moving up to the upside once again. So yeah, Robinhood, strong move here. I'm personally not trading or investing in this company, but there is going to be a resistance close to $73, $74 and support roughly over here, $49 to $50 a share. AMC is pretty much flat so far on the day. Strong rally yesterday, up over 12%, so back up to over $33. What do you guys think? What do you guys think? Where do you guys think AMC is going moving forward? Are we going to be able to crack above $40 a share for AMC? I don't know what happened to my analysis here. I think there was a resistance at close to this $40. So yeah, $40 previous support, now acting as some type of resistance here to the moon. 100. That's great. Yeah, so $40 is going to be the first resistance level that we need to break out of. If we can successfully break through that wall, like just whatever that supply is holding us down, then I could potentially see a retest of highs of $50 a share. And the reason I say that is because there's so much momentum behind this stock is that once the resistance gets broken, there's a higher probability if the volume picks up. You'll notice a volume, and again, with the momentum stocks that AMC is, our argument always comes down to the volume. 108 million shares traded yesterday, that's really strong. Look at the last few days. It was declining. It was below that white line, below the average Sunday volume. So if the volume can kick in, if the volume can be 150, 200 million shares, 250 million shares, that's going to really put a lot of momentum behind the stock and drive it up even further. According to TradingView, there's earnings coming up on August 9th, which is going to be next week on Monday. If that is the case, I mean, that could be a huge catalyst for the company next week, right? That could be potentially one of the reasons why we see AMC also push higher. So, all right, AMC Entertainment Holdings to announce second quarter 2020 results, and this actually came out. So, all right, so announced today that it will report its results for the second quarter ended June 30th, 2021, after the markets close on Monday, August 9th. So next week, after the close, this stock, I mean, there's going to be so many eyeballs on this stock. Like, so many people are going to be watching what this company does after the earnings. So the stream is going on until market open, and we will be just looking at different stocks until then. And then we'll switch over to some of our 4 to 5 stocks that we cover. But yeah, that right there is going to be a big catalyst for the company, for potentially to drive up volume even further. All right, so what do I think about Fiverr? So Fiverr had a great earnings call. I think it did really well. Guidance was good. Revenue was good. EPS was good. Overall, take rate was good. Average spend per buyer was good. So we broke it down yesterday. Overall, super pleased with that report. The valuation remains a little bit rich, so it's still trading in triple-digit price to earnings, and price to sales is pretty high too. I like the company, but just the stock in terms of the valuation is a little bit rich for my taste. So I would personally like to wait for either 150 or even lower. Like, if the prices can come down, I think that would be a preferred entry, much better desired entry for myself, right? And that's one of the things that we have to kind of learn the hard way, is to be patient, and if you have a set price that you want to pay for a stock, just stick to it, right? Never kind of, in my opinion, never give in on the FOMO or the euphoria of the stock running without you. That's completely fine, because if you don't want to pay 175 for Fiverr, you don't want to pay 175, right? If I want to pay 150, that's the only price I want to pay. So I'll only wait for it to potentially retest that level until it makes sense for me to invest in that company. So I'd watch that support level very closely. I have some alerts here if you guys can notice. So if it does retest that level, we'll kind of revisit the stock once again. But long term, I still like the company. The fundamentals are improving, and they also raise their guidance. You'll notice clear revenue growth for the company as well. All right, so let's take a look at SoFi. So SoFi actually did get rejected at 1665. We actually did get a little bit of a breakout over $16 once again, so we did hover over that level, but this is a resistance that we got rejected at July 21st. That is going to be the in Indian street pricing stocks. Mark, you have no idea. Some of the prices I have on stocks are like so ridiculously cheap that I would just not budge. I'm like, if that level gets hit, that's the only price I'm paying. I'm not gonna pay anything else. It's just crazy. Like, I have a list of where I want to buy certain stocks, and if they're like really like low as to where they're trading. Some of them actually gotten hit. Etsy, I wanted to buy it at 150s. Like, we haven't really gotten down there yet. So I started a small position at 180s, but if it comes down to 150s, like, I'm gonna be actually buying more. But there's other companies like PayPal. Like, I'll just like, I'm waiting to add more, right? Adobe is a stock that actually did run up a lot. I have a really small position in this company, but I'm just waiting. Like, if it comes down, test the 200 SMA or like $500, like, I'm gonna be buying more shares because I wasn't able to build out a fully formed position yet. But before it happened, it basically rallied to new all-time highs. This is a stock that's done really well year to date as well, right? So it's up almost 27% year to date. Of course, it's not like Moderna up over 300%, but still, it's done incredibly well, similar to Google and Microsoft as well. So yeah, SoFi 1665, 1670 is going to be kind of like some of the resistance levels, and 1430 is going to be a support. In my opinion, again, this is a support level that we are validating, that we have, coming in from May 13 previously as well. So I just watched those support levels very closely. Right now, we're just consolidating sideways. So there is upside for the stock, in my opinion, at least like a 30-40% upside if we get that breakout above 1675, and then we'll watch $19. So those are the two levels to watch. But it's also forming some lower highs right now. So there is upside, but there's also some resistance levels that we need to break before we get to that upside as well. All right, so we got about 15 minutes for the markets to open. We're going to create our charts very quickly, and then we'll kind of jump over to some of the other stocks as well. But 4 picks. We need 4 stocks that we're going to be watching intraday as soon as the market's opened. Which companies are we going to watch today? Is DraftKings one of them? Are we going to watch DraftKings? So Jim, I'll go over AMD in just a second. So let me know which stocks are we going to be watching at market open. So Alibaba, let's see how many votes we get for Alibaba. Just put the tickers in, and whichever tickers we get the most, we'll put them on here as like the top 4 that we watch. Dave says, Scotty, your buy targets are very, very low. I will be scared if PayPal goes to 240 unless the entire market corrects. I've been buying successfully a few percentages above your targets. That's great. That's the whole idea, right? It's like it doesn't have to be like a perfect target if you can buy it. And again, there's going to be some flexibility. Like Etsy, I jumped in. I didn't want to wait till 150s. But if we get those targets get hit, then that I think is going to be a desired entry, because that's like based on a calculation what that analyzed return is going to look like, right? If you buy it at 150, goes to 300, that's 100% gain over the next 5 years. That's like 15-20% return per year. So that is the analyzed rate of return that we are looking for based on our entry, because our price target's the same, right? That's the forecast that we have. The only thing that we can change on our end is the price that we pay for that stock. So I think, but that's great. That's if you're doing it successfully, why change anything? Just keep doing it. So that's awesome. All right, so we got plenty of Alibabas. So I'll keep Alibaba here at the top right, and then we'll keep NEO over here on the top left, and then we'll keep DraftKings, because I'm really interested in DraftKings today, over here. So we're now, look at that, we're up only 4.8%. Strong rejection at $55. So if I go over to DraftKings here, you'll notice that we almost tested highs of 55.50. So not quite 55.50 yet, but let's see the high for the day was 54.95. So we are getting rejected at that level. So there is some intraday selling pressure kicking in pre-market. And then, do you guys not want to keep Tesla? Not a single person said Tesla. Yeah, surprised nobody wants to watch Tesla today. So we got plenty of Alibabas. All right, so one person's at Tesla. So Etsy, QuantumScape a couple times. All right, so we'll keep Tesla over here unless we get a few other. So we got Amazon. All right, Tesla. All right, perfect. So Tesla bottom left, we got NEO top left, we got Alibaba top right, and we got DraftKings over here. We'll kind of switch around and see where they trade. But let's go over skills very quickly for Mo. So skills kind of hovering around that support level at 1246, I want to say. So yesterday we were up over 1.7%. So 1244, we're like literally trading at that level, 1245, 1250 levels. So again, this is a company that, in my opinion, is only right now as it stands a potential swing trade, not necessarily a long-term play, especially not for me because of the rich valuation that it trades at. But talking about the R side, the MACD incredibly oversold. It's down so much from its all-time highs, so it's down a little bit over 73%. So I'll continue to monitor this, but there are going to be some more support levels that you can potentially watch. as low as like this $10.75 level as well. But this is a strong support at 12.45. So until skills can hold up above that level, there is potential for upside, but of course with the earnings it basically dropped some more. So skill posted Q2 loss per share 21 cents and updates 2021 guidance. So Q2 revenue came in at 89.5 million versus estimates of 88.5. So we got the revenue beat. Combined 2021 revenue of $389 million. So quick estimate, right? 389 million, $4.95 billion. So if you do some very quick math, so here, let me just pull that up. All right, so we got the calculator here. I wanted to see what that future guidance was. All right, so right there. So their future guidance is actually 389 million. So you have 389 million and their market cap is 4.95. So they're trading at 12.7 times sales, which is actually not that bad. Right, so right now it's showing at 19.5, but their future 2021 price to sales is at 12.5, which is actually not that bad, right, for the company. So after this drop, after the 73% drop, it's now coming down to a more reasonable valuation. So this is a company that we can now start to look into from a fundamental standpoint, if it makes sense, if the total addressable market is there, if the earnings make sense, if the revenue makes sense, if the future forecasts and the projections also make sense. But from a technical level, right now 1250 is a support, all the way as well as this $10 level right there, 1090, and the resistance of course sits at those moving averages, the 50 SMA, the 200 SMA, all the way as $24 a share. Yeah, Mark, I know that you never liked Scales. I've actually never tested their UI. I don't know what that looks like. I've never really looked into the app or basically understood what that feels like. So I have no opinions of how good the company is in terms of their interface and what they actually offer. So ASTR, I know that this stock has been running like crazy. Yeah, so Astra Space up 23% yesterday. It was all the way to highs of 1172. I think it was up all the way. Yep, so it was at one point up close to 46%. So absolutely incredible move to the upside. But yeah, I mean, this company seems like it doesn't have any revenues unless TradingView doesn't have that. Yeah, it doesn't show anything. We don't have any balance sheet items. We don't have any income statement items. So it's kind of hard to really judge what the company is doing. Eric, can you listen to this in a podcast form? You should be able to, but it's just that you won't be able to see the charts. I am calling out the support resistance levels for a lot of companies, so you should be able to. That's a great question. I've really never thought about it that way, but you should be able to listen to it. The only thing is that you won't be able to see the charts itself, but I'm still like calling out the support resistance levels, so I think that should be helpful. But yeah, that's a great question. Running of hype of their launch. So yeah, I'm not too familiar. Again, completely honest, I'm not too familiar with this company. I haven't looked into this Astra Space, but it seems like it was pretty much beaten down quite a bit. I mean, from its all-time highs of $22, it was all the way down to $8. So 63% drop here. So yeah, a strong sell-off here, but now we're starting to see that upside once again. So resistance I'd watch on the day is going to be sitting roughly at that 1180. Aligned with this previous resistance, previous support as well. So you'll notice that we perfectly got validated a couple of times, resistance, and now we're just getting rejected intraday at 1180 as well. Skills, so big time, El Caddy. Steve, that's thank you for sharing that. I appreciate it. All right, so let's take a quick look at Mara, and we'll jump over to Bitcoin here in just a second. So Mara is up 1.68% at $32. We actually had a really, for everyone who's in our Discord, I've been buying Mara like left and right. That's been one of the stocks when we were buying like at close to like $20, $22, $26, $25, and now it's almost at 32. 32.50 is a resistance for Mara. That's kind of like the resistance that I have identified, only because we are pretty much getting rejected at this resistance here, previous resistance, and now that is going to be the level to watch intraday for Mara stock as well, all the way as $38.75. What do you guys think? Are we going to see a breakout? By the way, there was a huge catalyst that I was reading up on for Mara, which was Fidelity actually purchased Mara as a company, Mara's stock. So here, let me see if I can pull that up here. Because yeah, I was reading up why it was actually up more than Riot. Because when Bitcoin was up, it was kind of odd to see Mara up more. Because it was, I think it was up like 9 or 10% just a few days ago. Or yesterday, yeah, yesterday it was up over 9.5% when Riot blockchain was not even up that much. It was only up 2%. So I was curious if there was like a specific news to the company. So you'll notice that the multinational financial services firm Fidelity Investments has announced the purchase of 7.4% stake of the major North American mining company Marathon Digital. That was perhaps one of the reasons or the potential catalysts that we're seeing. So the deal was finalized $20 million on July 22nd, with the shares set to be spread across 4 index-based funds: Fidelity Extended Market Index Fund, Fidelity NASDAQ Composite Index Fund, Fidelity Total Market Index Fund, and Fidelity Series Total Market Index Fund as well. And the interesting thing is that these actually funds were held mostly in retirement accounts for a lot of clients that they actually have. So last 2 quarters have just been amazing in how much institutional ownership has grown in our stock. So that was really interesting for me to read because at Fidelity, I mean, it's not a small company. It's a pretty big financial services company. It's a big brokerage house. So for them to actually purchase this many shares was very interesting as well. So with Ethereum on the rise, it's only going to push Mara higher, as Mara is Ethereum based, as Riot is more Bitcoin. Okay, that's interesting to know. Thanks for sharing that. All right, so we got about 3 minutes left for the markets to open. Let's see where we are. With Tesla pretty much flat on the day. We got Alibaba also flat. We got NEO as flat as it can get, and DraftKings up almost 5%, but still pulling back from highs of $55 a share. So, but overall, it seems like we are recovering. The S&P is completely recovered here after the sellout from the jobs report. Yeah, so the jobs numbers are out. We broke them down at around 8:30 a.m. Eastern. It was almost about an hour ago. So if you go back on the live stream, exactly 1 hour ago, you should see the jobs report come out. And then we break it down for 30 minutes. And then you can jump over to the live stream as well. All right, so let's switch over to the Dow. Here, up 33 basis points. So strong move here from the Dow Jones. The NASDAQ still needs to do a little bit of a recovering. Down 35 basis points, and we got the SPY up over 12 basis points as well. Fiverr we also broke down earlier, Kimoy, so you can go back in the live stream, watch the analysis for Fiverr. We broke down the earnings and the technicals, and then you can jump over to the live stream. So the VIX still down 2%. Thank you, I appreciate that. Yeah, I don't want to mispronounce your name. That's why I'm not saying it, but I appreciate the likes. Thank you very much. So I'm not invested in CRISPR. That's a great point. Yes, so they are working with Vertex Pharmaceutical. Vertex spent about $900 million to partner with CRISPR Therapeutics to take lead on a newer project. So that's actually really interesting for them working together, but I'm personally not invested in CRISPR just yet. But Vertex Pharmaceutical, I think, with the sellout that we have seen recently, is still undervalued in my opinion. Strong move yesterday, 1.7%, and now starting to push past over $200. The next resistance at $205 per share. So that's the level that I'm watching for Vertex. But yes, great partnership for them as well together. Thomas, welcome on board. Good morning. Thank you for joining. What do you guys think? Green or red day? Quick. Last day of the week. First week of August in the books. What do you guys think? Are we going to have a green day or a red day for the broader markets? All right, so we got about 3 seconds, and here we go. The Nasdaq still down a little bit. All right, I'm gonna switch over to our indices. All right, so green, red, green, 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 green. Yeah, the markets are just so resilient, right? They just continue to break records. It's just records after records after records for the US markets. Like, it's just non-stop. Too resilient. Every dip is just getting... That's so funny. Green plus red equals greed. That's a really interesting way to put it. So yeah, the Nasdaq pulling back a little bit. S&P is still pushing higher. ASML. Let's check out that alert. All right, so this stock is starting to pull back. I don't know who was asking me about this company in our last live stream, but we did break down this company, I believe, in our previous live stream as well. So we did set up some alerts. So we're now starting to pull back on this chart. So we'll keep a close eye on this company. All right, so we got Tesla down about 30 basis points. NIO is also pulling back a little bit. And we got Alibaba sliding over 40 basis points. So Rami, that's a great question. So question, if you buy long term, would you sell when up and buy again when dips, or you just keep your stocks and don't sell? In my personal experience and in my opinion, this is what I actually do. The only two reasons why I would sell is, number one, if my price target gets hit. If I have a price target on a stock and it hits it, I'm potentially either trimming my position, rebalancing, or completely exiting out of that position. Price target is key. That's how you're going into that trade, because you have a price target on that stock. And that price target, you arrive at that target based on your fundamental analysis. And the second reason is if the fundamentals drastically change, if the risk previously anticipated increases in that company and the company is no longer investable, because the revenues are declining, because there's a change in management, because their core business is shifting, whatever the case may be, if the fundamentals have changed and they have basically changed the company, that's also a reason to rethink or reassess whether you want to stay invested, or if you want to have kind of reassess your opportunity costs and kind of move on to something else. So two basic factors is, buy price targets, and of course your material change in the company. So NIO dropping, yes. What about AMD today? So let's take a quick look on AMD here. AMD is down about 0.5%, but look at that, 110. We're bouncing off of that support. That's the first support level they talked about. Once AMD was starting to pull back, so now it's good that we're starting to validate some of the support levels. We're founding a good foundation for AMD stock at $110. We came down to 110.15 before pushing back up to 111. So that's the support level intraday that I would watch for AMD, and of course the resistance at $122. All right, let's take a quick look at MP. Up over 11.5%. It's really strong, pushing higher, back up to $40. So yeah, strong move to the upside for MP Materials as well. This was also a company that was actually brought to our attention from the live streams. But yeah, definitely moving higher. There's strong volume as well. All right, look at that. The S&P is pretty much out of the frame at this point. That's how much it's going up. Same with the Dow. Up another 172 points. It just hit a record level. The Dow Jones just hit a record high at 35,240. If you take a look at this, we're just literally at record levels. The Dow Jones has never been this high ever before. Same with the S&P 500, 4440 is the all-time high. The Nasdaq now starting to recover a little bit. We got the Tesla pretty much 0.5%, drafting still up over 5% here. Alibaba down about 70 basis points. Green is my new favorite color. That's awesome. And then NIO is pretty much flat on the day. All right, let's take a quick glance at the market and what's moving. And of course, we got Hood. Robinhood is up over 13.5%. We got Plug Power up over 8.5%. Fiverr pushing higher. Upstart, final. You know what? I can't even trust Upstart anymore. It's like you always get rejected at this level. It's like once again, this is like the fourth or the fifth time we're actually kind of inside this red rectangle. That's the resistance for Upstart at 134.50. Every time we've tested that level, it's just gone rejected because there's so much supply. There's like a wall like sitting there, so many shares that we just can't seem to absorb and push higher. It's just like getting rejected at that level. All right, back to our analysis here. So CVS is up, SoFi at 16.22. That's strong. Mara pulling back down to $31 now, down about 1.2%. We got Trade Desk, we got Fubo TV, we got SoFi, we already covered. Square's up. Then mid-September it came a big pullback, so markets did exactly the same thing last year with all-time highs, and then mid-September pullback. Yeah, seasonality-wise, it does suggest that we're due for some pullbacks in August, September, but we'll see if that actually does happen. Yeah, all right. So Spotify, Pinterest, Vertex, still green. Let's see what's actually red. You got NetEase, Upwork is down, Mara slightly down, Nvidia, Coinbase. Is AMD now green? Yeah, so AMD is now back green, $112.83. That's pretty strong, back up to 113 levels on the day. So yeah, I mean the markets are a little bit volatile here. Once again, new all-time high for the broader markets. But at the moment, it's just like hard for me to trust the valuations and the pricing, only because it's ridiculously high, in my opinion. And it can continue that way. It can more than surpass previous highs when it comes to some of the valuation metrics that we look at, some of the numbers, but it's just time to remain cautious if we do see a pullback, that's all. DraftKings giving up on most of its gains, look at that, so it's only up over 3% right now, or 2.8%, so really pulling back from highs of $55. That's the resistance for DraftKings. Let's take a look at Pinterest here. So Pinterest also pushing higher, slightly, back up to over $60. By the way, what did you guys think about Tesla's, not being invited into like the White House when they actually announced the plan yesterday? When there was also a video released on Twitter, and then of course GM and Ford were there, but Tesla was not there. Yeah, so all electric vehicles, and half of them should be sold, like half of the sales should be all electric by 2030. That was kind of like the new agenda or the new plan put forth by the President of the United States. So that should, in general, just help the entire EV sector, right? EV market in general. And yeah, that was kind of like weird too, because they're like they're one of the biggest, if not the biggest, all electric manufacturer in the United States. So it was like really odd they weren't invited. Yeah, that's also true, because I know there was like a union and association that was also there. But it is what it is. Tesla doesn't need no invite. But yeah, nonetheless, we got the markets now starting to pull back a little bit, but still green so far. Let's see if there's any gainers or losers so far. There's actually a really cool feature on TradingView too, that you can actually take a look at which ones are heavy volume and the ones that are actually going up. So not that I want to go over these stocks, but strong moves on the upside for some of these. So ANY up 50%, Sphere 3D Corporation But yeah, feel free to bring up any stocks, and we'll kind of go over that very, very quickly, as much as we can. So, all right, let's take a look at Amazon. So Amazon's still hovering around this 3365, 3300 level. That's the first support level I'm watching for Amazon. So we got a perfect bounce off of that level after this huge sell-off after the earnings. But I would personally add more shares at close to $3,000. That's the level that I'm willing to pay for Amazon. With my price target stays put at $4,000. That's going to be plenty of upside of 30% for the stock. Even from current levels, I think it's like 20% upside for the company. All right, let's look at QuantumScape. So QuantumScape has just been, unfortunately, on a strong move to the downside. We got the 50 SMA perfectly selling off here. There is no divergence either. Maybe there is a little bit, but there isn't like a clear bullish divergence that we can identify for QuantumScape right now. But there's just been lower lows, unfortunately, for the stock. And here, let's take a look on this. So yeah, it's just been on a consistent downtrend here. Support level I would watch is kind of like this previous resistance we got rejected at closer to this 21.50-ish level, $21.47. But right now there isn't like a clear uptrend yet. So I'd wait for the pattern to establish some type of a breakout, especially from its 21 EMA. If you're going to see that breakout over like $25, $26, that's when we can expect some higher potential upside for the stock as well. AMD is up 1.6%. Wow, 1.5% back to 114 here. Yeah, getting a perfect bounce off of 110. Right, so next resistance stays put at $122. But in my opinion, I just would want AMD to kind of establish a support, consolidate sideways, bring down the volatility a little bit, right? Because it's just the volatility has just been insane the past few days for AMD. So Coinbase has broke the resistance. Yes, it did. Great observation there. It's $255. We are now starting to break out from this resistance here. So that's a strong move to the upside. We'll turn that level into a support. Next target, if you can get that breakout, is going to be sitting roughly at $302. I know that's a pretty steep target from current levels. That's an upside of close to 18%, but I think it's possible if we actually break out, and of course if Bitcoin also pushes higher, because it's very tied to Bitcoin prices. Coinbase is, Mara is, and of course a lot of other companies are. Alright, so NEO is now starting to pull back, down about 1% here. And we got Tesla also down 43 basis points. Shopify is down. Netflix is down. Upstart touched 137. That's good to know. That's good to know. Etsy's below 180. That's great. That's really good. Waiting for 150 on Etsy. Really am. At 154, 155, like at those levels, that would be the best. If you can get like a potential pullback here on Etsy stock. So there we go. NASDAQ rally and then back down, and we got the S&P and the Dow still pretty much elevated at all-time highs. Plug Power seeing a little bit of a pullback here intraday and a strong move to the downside. A lot of questions on Skills. Skills is like a lot of people are asking about that stock. So it's starting to break down now. The next support is going to be at 1090, unfortunately, for this company, or 1085, like around those levels. But yeah, a lot of questions on Skills today. Yeah, so Kathy sold all of her China stocks. I'm not sure about all, but I know that she did trim significantly for a lot of companies, including Alibaba, Tencent, and some of the other companies as well. So again, I was surprised as much as I guess you are to find that out. But yeah, that was kind of strange to me too, that she basically trimmed significant portions of her Chinese positions. Skills, I think we already broke this down. They actually reported these earnings. So what is your personal price target on AMD long term, if you don't mind? I actually had a price target of 110 on AMD stock earlier. That's where we trimmed a little bit, and then we also trimmed at 120. So my price target was 110, but with the new fundamentals and the new guidance of 60% growth year over year, I may have to kind of revisit the analysis and really go over, what the future looks like for advanced micro devices, and then of course put a new target on it for the remainder of the position as well. So we're gonna again take it quarter by quarter and really understand how the fundamentals are improving for the company. But I'll have to do like the analysis once again on the stock and put a new target on it. Chinese stocks are the best way to lose money long term. I'm not sure if I fully agree with that, because they are undervalued and the businesses are strong. It's just, I guess the geopolitical risk and the regulation is like an overhang for the company. But if you just look at the business side of things, right? If you just look at the fundamentals, like Alibaba's earnings were great. I mean, we just broke down the earnings for Alibaba during our live stream. They were phenomenal. They actually did really well, and they have been growing, and they also gave us a really strong guidance. So yes, there is risk involved, which is a different kind of risk. It's not like a management or a company or like an addressable or competitor risk. It's not like something, a competitor comes in and your business is basically losing steam and you're declining revenues. It's kind of a different geopolitical type of risk that is very different to understand in terms of how to really price that in to the stock. So I do think that Alibaba is undervalued. But it's just there is going to be volatility in the short term to really understand how it's going to play out. But there's significant upside too. There's plenty of upside, in my opinion. The stock should be at well over $300. Fundamentally, if there was like a valuation, any valuation metric will put the stock well over $300. So why look at Baba when you can get the same thing out of Silver Plays? That's true, and that's the analysis and decision that everybody needs to make for themselves, right? Are you willing to take the risk for that upside in Chinese stocks, or are you willing to look at some other companies that may provide you with the same amount of returns with little risk, right? So that's a fair question. I get that, and that's actually a great point too. It's all about opportunity cost, right? So where are you willing to put your money into? Where are you willing to invest? And you're giving up the opportunity to invest someplace else. So I think that's a great point that you're bringing up. All right, let's take a look at Ford. So Ford kind of still hovering over this higher low. So that's kind of like the ascending support level. I was actually watching this stock today. And this is the ascending low or the ascending support level for Ford. And you'll notice that we have actually got perfect touch points for this company at those levels. So this could potentially be an opportunity if you can kind of set up a trade plan with a stop limit right underneath the low for this day on August 4th. As if we do see another rally, that's going to be a 17-18% gain back up to $16 a share. The R size somewhat oversold at 47. The MACD's also been selling off. So in my opinion, if you can get that breakout over that 21 EMA and this lower high, lower low pattern, then we could see some more upside for Ford as well. All right, so Nasdaq still red. We got the S&P pulling back, and the Dow is still up to record levels. DraftKings still holding on to some of the gains. Alibaba is down almost 1%. NIO's down over 1.7, and Tesla is also down. Let's take a look at Apple here. Pretty much flat. Apple has been coiling in for the longest time. It feels like it's just like it's just coiling inside this symmetrical triangle, so lower highs and higher lows, and it just feels like it's ready to make a much bigger move soon. Not yet. I feel like it's gonna do it like pretty much towards the end of August, potentially even in September. So we'll see. But as we fill this channel in for Apple stock right here, so as we kind of fill this in, then we can see a much bigger move take place for Apple stock. Alright, we already went over AMD, but I guess we can go over that once again. So 1.26%, 113. Let's look at PayPal. PayPal now 278, 279, close to that level, getting validated. So low for the day 279, and now we're back up to 281. So Robinhood is up over 16% now. That's incredible. Upstart 136.46, really pushing higher. What do you guys think? Are we finally getting that breakout for Upstart stock? Michael, perfect bounce off of 110. We did get a perfect bounce off of 110. So that was the first support level, and that we perfectly bounced off of. So what do you guys think about Upstart here? Is this support? Is this previous 134.50 levels? That's the red line you guys see here. Is this level finally turning into a support for the company? Because you'll notice that the low for the day 134.60, and the resistance we had was 134.50. So we actually did gap up. We gapped up, and then we basically came back down to validate that support before pushing higher. So what do you guys think? Are we going to perfectly get a breakout over this red rectangle or this range, or if we're going to continue to slide and pull back once again? Upstart on support. Yeah, so we'll see. I've got some alerts here, but I have very little confidence, only because previously it's gotten rejected several times. I mean, this right here, August 3rd, we were watching it live, and it basically shot up all the way down to 139. From lows of 125 to 139. That was like a huge intraday move, and just so much volatility for Upstart. 11.5% gain intraday for us to close back down to 128. So there's plenty of sellers there. TTCF, Tattooed Chef, I think it's still consolidating inside this big symmetrical triangle. So I'm going to be very interested in this company if it hits this higher low. That's going to be the ascending support. So watching it very closely. I've got a couple of alerts set up at close to $19, $18 a share. But I like the company as much as I've actually learned about the company. I like it. I haven't done like a full deeper fundamental analysis yet, so I don't know what the future forecast and the growth looks like for the company, but I like what I'm seeing so far on it. So $19 is a near-term support right there for Tattooed Chef. Let's take a look at APPS, Digital Turbine. Let's see how that stock is doing. So still hovering around. This stock, by the way, has gone up almost, I think, 100% of the times on earnings. We actually did some analysis on it in the past, but I wanted to also take into account like pre-pandemic levels, and pretty much every time on earnings this company has gone up. So this is worth looking into next week. They're reporting, so I'll actually do a video on them over the weekend and break down their earnings expectations, like the revenue, EPS as well, and then go over what we can expect. Right now, I feel like the fundamentals make a lot of sense for the company. Actually, not so much. 111 times earnings, 19 times sales, pretty high. And yeah, the last time I checked, the balance sheet was also decent. Yeah, so valuation still is elevated for Digital Turbine right now. Trades at 111 times earnings and almost 20 times sales. But this stock, again, on earnings has rallied. In the past, you'll notice that this right here was the earnings. We basically pushed up to 28%, right? Highs of $80 a share. We took a swing trade on this in the past as well. And this right here was also that we gapped up after the earnings, followed by a couple more days of rallies of 51% gain for the company. All right, so we got Neo down over 1.5%. DraftKings still staying up. Snapchat is up. Let's take a look at some of the SPY holdings here and recovery stocks. So AMD is up, Wells Fargo, Bank of America, JP Morgan. So we got banking is up quite a bit. And again, if you kind of understand the psychology of the market, perhaps what I'm also thinking, what the market may be thinking as well. And I think Rita brought it up. I think somebody brought it up. I forgot. Sorry if I didn't call you out, but This jobs report that we actually got today, the labor market improving substantially more than the anticipated number. And of course, when you look at those different categories, they're actually improving as well. The unemployment rate's coming down. Now we're sitting at 5.4%. A better jobs report and a labor market report goes to show that the Fed, of course, is going to taper sooner because there's substantial further progress, according to the Fed. And they could also raise interest rates sooner, which actually is benefiting banks when we raise interest rates. And of course, the yields are also up on that news, which is why you have Wells Fargo, Bank of America, JP Morgan up anywhere between 1.5% to as high as 2%. So yeah, banking, financials doing really well today on that potential news. And tech, you'll notice, is kind of sliding. Not so much sliding, but somewhat red on the day, right? So we got Amazon, Tesla, Nvidia, Apple. We got the QQQ ETF. We got Netflix, Microsoft, all down on that potential labor market news here. So Zoom is down over 2.3%. Shopify pretty much flat here. Chevron and ExxonMobil also somewhat flat. But yeah, Apple now starting to move up nicely here. And the VIX is back down. 2.2% here. So we didn't quite get that third spike here that we were looking for, or at least what we were expecting. We just got tapped out at 20 levels. Again, that's still a resistance. That was the first time that we got tapped out at. Then we tested 25. We're not quite at 29, 30 levels. Alright guys, so we've been doing this for about an hour and a half now. So I just want to thank you guys for joining in. I really appreciate all of you. I hope this was helpful and you got a lot of value out of it. And I will be doing like a review video on the jobs report and what the labor market actually looks like now in terms of the unemployment rate, the participation rate, the JOLTS numbers, the average hourly earnings, different categories, and where we added jobs and so on and so forth. So I will do like a summarized video for that, but thank you so much for joining in. I really appreciate you guys, and hope you guys have a great day and a great weekend. And again, take some time off of the markets, just enjoy. Don't look at any data or like stuff like that, because I know over the week we do plenty of that stuff. So I hope you guys have a great weekend and enjoy and have fun. And thank you so much for joining in. I appreciate all of you, and I'll see you guys in the next live stream. Thanks again.